6,000, falling below that level yesterday. And while equity markets corrected over the last few sessions, Bitcoin, far from being an alternative safe haven to gold, fell along with its fellow cryptocurrencies. On Monday, Britain's biggest bank became the first in the UK to announce a ban on customers using credit cards to buy Bitcoin. Another factor undermining sentiment, talk that Bitcoin and other cryptocurrencies could be banned as China blocks access with its Great Firewall of China. So where next for cryptos and the technology behind them? Blockchain. Well, joining us to discuss this are Ian Lewis, a blockchain technology consultant and co-founder of the group Bitcoin Women, and Colin Platt, co-host of Blockchain Insider, a podcast specialist in Bitcoin and blockchain, if I can get my words out. Thanks very much for both for joining us. Now, this show is for you, the trader. We've brought these guests together to help you understand cryptocurrencies, to help you trade these markets. So you can either send your questions via the Slido app, slido.com, or download the app using the event code IGCryptoChat. Or if you're watching us on Twitter, use the hashtag IGCryptoChat, or indeed on YouTube as well. Then please do tweet us or send us messages, and we'll put your questions to our guests. Okay, so let's get straight to the conversation though. Welcome to you both. Let's start with you, Rianne. Let's start with how you got into the Bitcoin and blockchain.
Okay, so I've always been interested in markets and financial systems. When I read about Bitcoin back in 2011, I was absolutely fascinated, but it took me a couple of years before I started dabbling. So in 2013, I started trading cryptos, and because I was finding it quite difficult to track my balances, as we all know, they're amazingly volatile, and also having wallets in different places, different exchanges, I was finding it difficult. So I'm a software engineer by trade, so I coded a portfolio tracker to keep track of all my balances, and then after I released that and started talking to loads of people in the community, it just became a bug. I thought about nothing else. I made lots of friends in the community. I got together with the friends and launched London Women in Bitcoin, which I still run, and then eventually became more interested in blockchain technology, as we know that underpins cryptocurrencies, and started doing consultancy in that area too. So now I more or less live, eat and breathe crypto.
I think the same probably gets said for you as well, Colin, there then.
Similar. So I used to work on a trading floor at a large European bank. Heard about this Bitcoin thing, saw that the prices weren't the same in different places and tried to arbitrage it. I think I made that much money and then lost that much when they blew up. So that was a lot of fun. Fortunately,
the losing or the gaining? Or
well, the gaining was more fun than the losing, but the learning process, unfortunately, was small at that point, and it's fully recovered beyond that, fortunately. But I was really interested in the technology aspect of blockchain and distributed ledger technologies. But kind of as a hedge, it was this cryptocurrency thing everybody was saying back in the day. It may disrupt banks. I was and still am very skeptical of a lot of that talk, but I said, well, why not take a punt on that and then take a punt with my career on doing the blockchain technology aspect. Got involved with things like R3, which is a big consortium of banks, a few other of the industry initiatives on the blockchain, not cryptocurrency side. But more recently, after I left the bank, all of my focus has been on cryptocurrency, dealing with the community here in London and abroad, in Switzerland mostly, as well as in France. Very curious on where these things are going and who's trading them and why.
I think we all are, and let's try to get to the heart of that. But I want to start with your views on whether this is a new age currency or a speculative bubble. And considering the rises and falls we've seen in the likes of Bitcoin, many would think it was the latter. I mean, I don't know who would like to. Colin?
Can it be both?
Yeah, could be, indeed. Yeah, I mean, everyone's referring it to as the internet, as it were, as how we viewed that how many years ago.
Well, everybody'd like to be in at an early stage of something that's going to be the next internet or the next whatever it happens to be, and they'd like to all think it's not the next tulip bulb or the next Celsius bubble. It's hard to say because there is no good way to price these things, and compared to...
That's the biggest issue here, isn't it? I think, and that's what a lot of people can't grasp is. It's how do you price it? People, you've got bricks and mortar, you've got gold. People can understand how that's priced, but how do you price this?
I think you have to understand that with something like Bitcoin, there is a scarcity value built into the very code itself. And I think this idea of intangibility is really interesting because people people don't really think about fiat currencies being intangible, and in fact most fiat currencies don't have that scarcity value that Bitcoin and some other cryptocurrencies have. So it's hard to ascribe value and forecast what the price will be, but certainly
a lot of people are, though. I mean, you hear these numbers being bandied around, 40,000, 50,000. For you, 2018?
So hard, because if I come out with a really high number, that's like
putting your life on the line. Come on.
Irresponsible. I'll stick to my line. At the end of the year, I think we could see 50,000, but we could see 4,500. So a lot of my friends hate me because when I talked to them about Bitcoin a couple of years ago, I erred so much on the side of saying, really don't put in what you can't afford to lose. I think it's world-changing technology, but really don't risk anything you can't afford to lose. And then, of course, end of last year, a whole load of people, why didn't you just tell me to buy Bitcoin? It's always
the way. Well, that's one of the reasons Lloyds came out and said, don't buy credit cards, because people were doing exactly that, putting money on that they couldn't afford.
And a lot of that's been irresponsible. I think, these markets are incredibly volatile. I think it's almost certain that at some point this year we'll see $100,000.
Let's pause on that point.
Okay.
Let's repeat that point. So you think it's going to be $100,000? So
I don't think it'll end the year there. It may.
It may hit that.
I think at some point this year, we have the price chart here in front of us, and we're looking at the last 2 months here in front of us.
We're going back to August of last year.
Okay, back to August of last year. Look at that.
Bitcoin, we're looking at here.
This is Bitcoin. This is one of the less volatile ones, believe it or not. And just in the last month or so, the volatility has been incredible. We're down 70% from where we ended the year. The notion that this could go up 10, 15 times isn't really that weird.
But what will be the biggest drivers? Is it? I talked at the beginning about regulation. I talked about countries banning, China putting bans on terms of the sort of trading via the internet. What is it though that's going to then drive it back to these prices, be it up to the 50,000, 100,000, or down to 4.5?
So it's hard to say. My take is I think there's a lot of people that are interested in investing in Bitcoin and other cryptocurrencies, mostly Bitcoin. Because they've heard about it, it's something where, although they may be quite conservative in their traditional investment, there is a lot of excitement around this could be the next, whatever you want to call it. It's been very structurally difficult to actually get involved in this. And I've talked to more risk-taking investors who say, I've been doing everything I can, I just want to get my hands on this, and I cannot. This is the scarcity thing. The price is driving up, but just structurally, even if I'm ready to pay whatever the price is, even if it's today we're trading around $8,000 US, even if it's 10,000, I just want it.
Yeah, I think the on-ramp has been a huge problem because when we saw this sudden surge in interest towards the end of last year, most of the exchanges actually closed their waiting lists. And even some of these were exchanges where you already needed to have crypto in order to participate, to buy other cryptos. But certainly the on-ramp applications and so on, where you could exchange fiat for cryptocurrency, nobody could buy Bitcoin. It was or Ethereum. It was really strange. It's like there's this huge pent-up demand. I think you're right. And now that Robinhood, for example, have said that they're going to do this,
that is an interesting one. So this was a platform for investors to come in, generally retail investors in the U.S. They said all of a sudden we're going to do Bitcoin, and they had 1 million people get on their waiting list. And this was in 17 states in the U.S. So U.S., 300 million plus population, 17 of those states, 1 million people on the waiting list.
Well, we just had the head of the SEC yesterday talking about the fact that actually he's not concerned about the volatility, but he would like to see more regulation. And I think that's one of the key things. Do we need that?
Need is a difficult word. To my mind, people need to be a lot more educated about the choices they make. I think if there's one thing that's likely to drive millennials away from banks and towards cryptocurrency, it's the idea of banks restricting their activities around cryptocurrencies. I think the problem is that for a lot of millennials, certainly, they see investing in traditional investment vehicles as being less interesting, and they see the SEC discussion yesterday was super interesting, because it was as though Giancarlo was acknowledging this shift in interest and saying, what right do we have to dictate what younger people invest in?
I mean, and that's really the key thing, is that people are interested in it and they want to. Actually, isn't it more important to make sure they've got the information they need to trade it responsibly?
Yeah.
I think that's the key thing, which comes to questions. We have got some questions. As I said, the show is about you. You can tweet us using the hashtag IG Crypto Chat. You can message us also if you're watching it on YouTube as well, comment there, or using the Slido app. And I have got some questions here. And it's actually about stop losses, which, of course, when we're talking about trading responsibly, it's really difficult with something like a cryptocurrency, because the moves are so volatile. The same kind of rules don't always apply. And we've got one here saying exactly that. What are your thoughts, and how do you set them effective and efficiently when you're trading these kind of currencies? Can you?
Ooh.
Tough one for you.
If you want them to get hit, yes.
That's it. Do you know what I mean? Without, you know, getting pulled out straight away.
Yeah, because I think one of the problems with this is that a lot of the exchanges, because they're very new, have very small numbers of people, their technology's not scaling amazingly well at the moment. So you have things like, do you remember that massive Ethereum flash crash where it went from something like $300, it was about just under a year ago. Yeah, it went from $300 to 30 cents on one exchange within about, but only for about 2 seconds, and somebody made millions out of it. And I think that's the kind of situation that, although obviously that's not happening every day, it's
very difficult to guard against.
Yeah.
But I mean, we just have to say, obviously, you need to make sure those risk tools are in place, especially with something as volatile as this.
Yeah, I think the key is you still need a lot of human judgment rather than setting these things and forgetting about an investment, especially a leveraged investment into cryptocurrencies. You almost have to make it small enough that you can sustain a complete loss in it. And I think that I said it could hit 100,000. I'm also very convinced that it could be less than 1,000 at some point this year as well. But actually sitting there watching your investment and not holding risk for sustained amounts of time, especially on leverage.
I mentioned regulation. One question has come in on that, so I just want to bring that up before we kind of move elsewhere to a sentence. Will Bitcoin be regulated as a security in the US?
No, it won't. And they were very clear last night, European time, yesterday in the afternoon, from both the SEC and the CFTC, and they've been repeating the same line. The markets, the way that people access the markets, things built on top, particular ICOs or tokens, may and often are securities and need to be regulated as such. Cryptocurrencies, Bitcoin by name, is not a security and will not be regulated as such in the United States.
Yeah, they made a clear distinction between those. They were talking about regulation for ICOs, which obviously a lot of people have been talking about that, but they did make that distinction between security tokens, and as we know, lots of people pretend that their tokens are utility tokens, whereas they are actually securities by any other name.
One of these questions is actually quite interesting. We're talking about that understanding. There's someone here saying, is Bitcoin sensitive to dollar moves? And this really plays into that understanding of Bitcoin. And actually, should you be trading something if you don't fully understand what the drivers are?
Well, I mean, to answer the first point, is it correlated to anything else? I would have said before this week, no, not at all. But what we saw when the Dow fell was that there was a lot of correlation. Can you link it? Yes, at some points, maybe it's to the dollar move. And I was watching, was it in late 2016, was quite linked to the Chinese yuan, because of, at the time, a lot of the speculation around Bitcoin was potentially it was being used to move money out of mainland China, and especially when there were more controls around that. Now, the dollar particular movement, a lot of people speculated that Bitcoin may hit this 100,000 number if we see something like a major bank collapse, which would have a negative impact, obviously, on the US dollar.
we talk about Bitcoin an awful lot, but of course there's a whole host of other cryptocurrencies. One question is, still Bitcoin, the prospects for forks like Bitcoin Cash and Bitcoin Gold. We haven't even got into forks yet, but in terms of that?
I'm not. I think they're a distraction. Obviously, it's quite nice for people who hold Bitcoin to have had all this airdropped free cash if they sold at the right time. Obviously, that's a good thing. I think the forks are inherently less. I mean, Bitcoin Cash, people have spent a fortune kind of propping up their fork and spent a lot of time publicising it and so on. I think they're less interesting than other cryptocurrencies with different properties and different use cases. I don't know what Colin thinks.
I think I would generally agree with that. If any of them exist in 12 months' time, I would be surprised. Okay. However, if one does exist, it's probably Bitcoin Cash. I don't actually understand what the value proposition of Bitcoin Gold is, other than free money.
Which of course is, you know,
which is great. But is that a sustainable product and a sustainable currency? I don't know. Bitcoin Cash, I think, was set out for specific ideological reasons, and as Bitcoin itself is able to advance its technology, it's continually proving that the ideological reasons that Bitcoin Cash was founded on don't have a basis. That said, it's got a very strong following, and that's why I think it's the most likely to survive in any meaningful form.
What about some of the other cryptocurrencies that we've been asked to hear about the prospects for Litecoin, also Ripple, of course Ether as well, we've mentioned?
I'm a huge fan of Litecoin.
Colin looks surprised there, so we'll come back to that in a minute. Go on,
no, that's
fine. You could argue that a lot of, well, I say I'm a huge fan of Litecoin. I think it's got utility for moving cash around and making payments in a situation where Bitcoin fees are high. I don't think in terms of value it's ever going to approach what Bitcoin is or be a quarter of what Bitcoin is, which is what some of its more voluble fans claim for it. But I think as well it's got a certain amount of brand loyalty.
No, I agree with that. I agree with that. The original use case, as far as I understood it, for Litecoin, other than it was a cheaper than Bitcoin coin, was to effectively arbitrage exchanges on the cryptocurrency leg, where I could sell a Bitcoin in one place for a Litecoin, move that Litecoin someplace else, and then sell it. Obviously, when you need to go through the banking system on the dollar arm, that may not be available. I think Ether replaced that in 2015. Litecoin's done some innovation and does have a very strong brand following. And one of the things I like to say about these is cryptocurrencies aren't currencies or assets, they're religions. And people adhere to them. And it's not as a negative way against either cryptocurrencies or religions, but people have a certain thought about what these things are, because at the end of the day, they're experiments. We're not sure what a cryptocurrency is, and we're trying to figure that out and what it's good for, and it's a very expensive experiment. But I don't necessarily understand, as Bitcoin advances and gets some of these things, like Lightning Network is one of the big topics right now. What does a Litecoin do in that world that may exist in 6 months from now?
Talking about the ones that may exist, and we've got another question that said, what are your views on Stellar Lumens? Could it be the best performing cryptocurrency in 2018? Of course, a lot of people comparing this to Ripple in terms of a sort of South Pacific intercontinental transaction or coin.
Can I just say, like, I don't know anything about technical analysis and charting, but the one chart I really did like was Ripple. Somebody pulled it out and they showed Ripple's going, and then it spikes up and almost perfectly comes back down, and it looks like Burj Khalifa in Dubai. I'm sorry for all the people that bought it much higher than it is today, and they've lost tons of money. I worked in banks. Ripple's supposed to be selling to banks, and we'll talk about Stellars in a second. As a former banker, I don't understand Ripple's value proposition and why it's worth anything.
The token isn't actually used. The token has no use at all. That's
other than funding the company.
Yes.
Yeah. Other than funding
the company. Both and it's not decentralized in any meaningful sense.
And Stellar was at one point very close to Ripple, was set up by the same person that originally built Ripple, and actually as a footnote, Mt. Gox, the exchange that collapsed in 2013, 2014. It's trying to make some of these enterprise corporate partnerships, which is not in the ethos of most of the cryptocurrencies, so they are standouts. Now it could follow Ripple and go up to the roof because companies like IBM have announced that they're working with Stellar, amongst some others. So it could perform positively, but at the same time, it does lack a lot of the things that cryptocurrencies strive for, like decentralization.
Yeah, and also to me, right with its inception, it kind of showed that it wasn't sort of culturally aligned with the whole idea of cryptocurrencies, because I remember they did an airdrop just shortly after they started, and you had to be on Facebook to participate in the airdrop. Now that immediately annoyed me because I'm a Facebook refuser. I don't have a Facebook account. Normally I'm quite keen to get my hands on anything free.
Free money is great.
Free money. But I couldn't get free Stellar because you had to have a Facebook account, and I just thought, not right.
Already excluding some people. I mean, I'm not going to name every single one. We've got quite a few questions in terms of other cryptocurrencies. You know, what do you think of Dash? We've got Tether, we've got Tron. Half these I've never even heard of. You know, can they make trades? Can they make returns in 2018? Can they make big returns in 2018? I think the key for me here is, of the ones that are out there and that we've heard about or not heard about, or you guys have heard about, which we want, before we move to blockchain, I really want to get onto blockchain, is the one for you to be watching this year?
Are we allowed to?
Well, which for you? It's in terms of what you're watching, which is the one for you. I mean, we've got all these smaller ones that kind of keep popping up and people talking about. But which for you is the one you're watching?
I'm quite interested in one called Icon, which trades as ICX, because it's got genuine use cases. I don't know, I quite like a lot of these new platform type tokens that they just seem like they are representing genuine technologies. They're not, but for quick returns, it's difficult because anything can make.
We don't do quick returns.
Make a quick return. Anything can make a quick
return. We don't do
quick return. Even something rubbish can.
I think it's and we mentioned Tron. I mean, there's a few out there that are questionable in their ends, and I'm not singling out Tron, though other people have, where they may be fraudulent scams, or they plagiarized all of their white paper, or they haven't delivered anything, and what you're trading is not actually the token for a working network. And some of these may go on to be successful. We've also seen massive flops like Tezos, which may emerge, but right now is rocky, to say the least. I think the theme that I'm watching, which is gaining much more importance, is the coins which mask transactions and mask identities. And I won't name them, but there are a few of them out there that people are looking at, just because this is seen as one of the failings of a Bitcoin or an Ether or a Litecoin in some people's view.
And I think this is the key, that we go back to that whole really understanding the market, understanding what you're trading. I mean, here at IG, you know, we offer Bitcoin Cash, we've got Litecoin, Ether, Ripple, Bitcoin, because these are things that, you know, we now have a proper understanding of, and to how to trade them and what to trade. I want to get to blockchain because, of course, you know, that is kind of where you're working now. And one of the questions is will blockchain be around after Bitcoin, and is blockchain where we should be looking at?
Well, you say after Bitcoin.
I was going to hit on that.
Well, it says, will it outlive Bitcoin in terms of the technology, you know, and what it's being used for?
I think blockchain technology is for people who've compared it to the internet. It really is. But what people have to realise, it's where the internet was maybe 20 years ago. So it's got this thing that people in corporations who've been told that using this technology will just transform everything, and it won't.
Yeah.
And it certainly won't yet even do a lot of the things that it is good at doing in a way in which it will in the future. It's in its very nascent stages, but yes, I think it is world changing. It's just it's not got the potential quite yet. to
So
do
how
with
do you
different
invest?
aspects.
One of the questions they want to know is, well, how do you, we talk about investing in Bitcoin, we talk about investing in Ether, but how do you invest in blockchain, the kind of companies that are really sort of in that ground stage of it?
Carefully. There are a lot
As
of
with everything else.
as with everything else. I mean, there's a lot of companies that have gone out and with no real understanding or true interest in getting involved in distributed ledger technologies or blockchains, and just changed their name and then announced we're not actually doing anything and seen their share prices triple.
Oh, like the blockchain iced tea company.
Yeah, that's one of them. Companies, mining companies. I saw one in Canada a couple of weeks ago that said, "Oh, we're going to do Bitcoin mining." There are some privately held companies that, if you're interested in this, either from a cryptocurrency point of view or non-cryptocurrency point of view, may IPO in the coming years. Obviously, there's angles to get in with smaller companies if you have those connections, but it's not open to necessarily everyone. There are companies, if you're interested in how this might affect, there's obviously companies, banks in particular, that are investing in this technology for their own consumption. I would say if you're interested, look at those companies that are interested in it or actively moving and not just making noise about it, and that takes a lot of research. But maybe that's something worth investigating how that might impact their future.
What about the possibility of hacking? One of the questions is, can blockchain be hacked? And right when Bitcoin sort of became the name that was branded about, there was this whole thing about being hacking, your wallet can be hacked and all this. But what about blockchain? How secure is blockchain?
Okay, well, let's take Bitcoin first. I think the most important thing to say is that the Bitcoin network itself, the Bitcoin blockchain, has never been hacked. It's a really common misconception that it's been hacked. It's not. It's third-party services on top of the blockchain that have been hacked, like wallets, exchanges and so on. It's kind of the equivalent of somebody saying the Bank of England was hacked when a local branch of a bank got robbed or something like that. So the Bitcoin blockchain has never been hacked. However, with other blockchains, while say you are an independent organisation developing some sort of distributed ledger technology, well, that is only as good as any other software project and could theoretically be full of bugs or hacked. I think people talk about the blockchain like it's some sort of monolithic entity. Of course it's not. There are many, of which the Bitcoin blockchain is the most well known.
I mean, could we see it replacing? I mean, there's talk of centralised clearinghouses. Are there certain aspects that it's never going to do? Is that where it's going?
Yeah, this is the notion of hyper-Bitcoinization, replacing a central bank or all central banks. We've seen the IMF say, this may get included in a basket of currencies for some central banks, especially in smaller countries that may or may not need US dollars as a reserve currency. Maybe. That's kind of the upside, right? But I think that there are a lot of questions. Will Bitcoin become a major payments network for you and I to use on a day-to-day basis? I don't think it makes any sense. It's not going to replace Visa, certainly. Would it replace the central bank's payment system that we don't see, but banks use amongst themselves? Unlikely. It may replace central banks paying each other for trade balances, maybe.
I want to get to a couple of the questions because I'm wary of the time here. It says, almost all coins seem to be bound to BTC. Could we bind other coins to something else so it's not as driven from the Bitcoin price? Well,
it's interesting. I think in the last, it used to be with all the crypto exchanges that you would have a BTC pair. But over the last 6 months or so, more and more exchanges are offering more and more Ethereum pairs. And I think because a lot of people who've come in the last year or so, their first experience of investing or whatever has been with ICOs, where normally you have to have Ethereum in order to buy the tokens. There has been this they're thinking of cryptos in terms of Ethereum. And certainly my own portfolio tracker, Count My Crypto, I've had a lot of requests for the price to be of people's portfolio to be expressed in Ethereum instead of or as well as Bitcoin and other fiat currencies. And I think now people are more and more thinking about the Ethereum equivalent value of their tokens and currencies in a way that they weren't before.
Yeah, I would agree with that, and I think it's also worth noting that a lot of retail exchanges have also started to offer dollar, euro, sterling, yen in particular pairs, or Korean won as well. Been a massive driver. So to be able to mark, let's take Stellar, because we talked about it earlier, Stellar versus Korean won. A lot of people may not at all be interested in the prospects of Bitcoin, but they like one of the other coins for whatever reason they think it's going to go up or down. Why would you want to then benchmark that trade against Bitcoin? As you say, Ether has the ICOs built on the back of it, but we see new markets emerging all the time. It's still very early days, but yes, Bitcoin traditionally.
One last question to get in. What do you think about governments launching their own cryptocurrencies, such as the Venezuelan petro?
Oh, God.
Short it. Dump it.
I thought it was super interesting, but also quite sinister. I don't know the RS coin thing. There was a white paper and some academic research done at UCL a couple of years ago now. It must have been 2015, and I'm still not quite clear on whether it was officially Bank of England endorsed project or whether they just said informally that they were interested in it. But it was a white paper laying out how a national cryptocurrency might work. Of course, for governments, there are huge attractions in this, not least the fact that they can very, very tightly control where money goes and how it's spent. You could imagine a scenario, for example, where you have a country like Japan, which has got this huge deflation problem, and they've airdropped money to their citizens in the past to try and get the economy moving again, and people have just saved it because it's become so culturally ingrained that that's what you do. So you could see how, from a policy point of view, if you had a contract-based digital currency, you could airdrop money to people on the basis that it would evaporate if they didn't spend it within 3 months or they didn't spend it on a particular item. It's got, and of course the idea of having a cashless economy is very attractive for a lot of governments because it means they can see exactly what's being spent and by whom. I think if we went down that route, we would see a lot more attraction towards the type of anonymous currencies that you were talking about.
And that's the thing, is that the rules are there to be written still, aren't they?
Yeah, I think the central bank, government-controlled cryptocurrencies completely misses the point. I mean, it's like saying we can have gold, but instead of it being gold, we can just create more gold when we want more gold. That's kind of the closest analogy I can come up with. But particularly a lot of these are to say, yes, they're backed by oil, but actually they're not at all backed by oil. What is the value proposition? And a lot of people have talked, years ago there was talk about Iceland adopting something called Aurora coin. That quickly got debunked and people lost a lot of money in that. There is really no value for a cryptocurrency to exist in its, as we understand cryptocurrencies, backed by a government. However, there may be a use case, and there probably is a very strong use case for blockchains and distributed ledgers to have national currencies inside of them.
Okay, I'm going to have to leave there, but thank you both very much. An interesting conversation. We could go on for a lot longer, but thank you very much to our guests this evening, Rhiannon Lewis, a blockchain technology consultant, co-founder of the group Bitcoin Women, also Colin Platt, co-host of Blockchain Insider, podcast specialising in Bitcoin and blockchain. As I said, this conversation could go on a lot longer, so we're coming back in 2 weeks. Join us on Thursday, the 22nd of February. That's at 6:30 in the evening. We're going to be joined then by Brett Scott, author of The Heretic's Guide to Global Finance, Hacking the Future of Money, and Darren Chag, founder of Richtopia and co-founder of Blockchain Age. That's